This is how a world champion trader builds winning strategies, Kevin Davey.
By the renowned Kevin J. Davey. Kevin isn't just an author, he's a full-time trader, leading developer of algorithmic trading systems, and someone with a proven track record. Kevin made his mark by achieving triple-digit annual returns in a global futures trading contest for 3 consecutive years, consistently finishing at or near the top. This feat has earned him a reputation as an authority in systems trading. His book offers a unique perspective by combining his personal experiences with actionable insights for traders at all levels. Before we delve into the detail, and for those new to the channel, don't forget to look at our huge library of stock trading and investing material, where we break down often complex subjects into easier to digest summaries. You can also access my strategies developed from over 30 years of experience, whilst also gaining access to my bespoke breakout scanner and fantastic community of like-minded individuals. Back to the video. Kevin brings over 25 years of hard-earned wisdom to his book. He's upfront about one thing: this isn't a guide to instant success. Instead, it's a toolkit designed for disciplined traders looking to refine their approach. Kevin emphasizes the importance of rigorous testing before putting strategies to work with real capital. He also warns against over-optimization, a common pitfall where strategies work well in backtests, but fail in live markets due to unrealistic assumptions or overfitting, something I completely agree with. Whenever we change or add any variable into a backtest, we need to understand its rationale and logic. If we can't, it's probably wise to move on. The book focuses on simplicity. According to Kevin, simple strategies often outperform complex ones because markets reward clear and logical thinking. Complex strategies, on the other hand, are more prone to breaking down under changing market conditions. The book features 41 entry strategies and 11 exit strategies, all presented as tools rather than ready-made solutions. Kevin explains that these strategies are not plug-and-play, but building blocks you can use to create or improve your trading system. To make the process manageable, Kevin includes code snippets that can be tested in the TradeStation terminal.
Wow, that's cool. I didn't know. I didn't actually read his book, but I had heard of Kevin. So I didn't know he had 41 different strategies, 11 different exit strategies, and even the code in there. That's pretty cool.
He suggests testing one strategy per week, which allows traders to evaluate all 52 strategies over the course of a year. This systematic approach is particularly beneficial for new traders who can use it to identify a style, a time frame, and set of instruments that suit them best.
But I think all trading strategies should be systematic, right? Otherwise, it's just gut. It's just like, oh, look, this stock is going down. Now's the time to buy, which just seems like that's so much of what finance YouTube is this stock is going down. Now's the time to buy, right? Rather than being systematic, maybe some moving averages, maybe some different types of indicators, maybe even using outlier, right? Some buy and sell signals like that we show. I feel like all trading strategies, if you want to be successful in the long term, have to be rules-based. They have to be. And a lot of them can be coded in a computer.
Again, this is highly important. If you adopt a strategy that does not fit your temperament or style, it will unlikely be something that you can follow with discipline over the long run.
And that also is why I like to talk about how my plan was developed over years of trading, because I found what worked for me and also what didn't work for me, but I adapted it to fit my personality. And that's the same here, right? It may not work for you at all. You may want a lot more action. You may want to trade only twice a year, right? And so you got to find that plan that works for you.
For experienced traders, the strategies provide opportunities to enhance existing systems. However, Kevin advises caution. It's important to avoid overwhelming your system with too many changes, as this can lead to analysis paralysis. One recurring theme in the book is the necessity of testing. Kevin stresses that traders should thoroughly test strategies in a simulated environment before using them in live trading. He also recommends keeping position sizes small during the testing phase to minimize risk. As much as that sounds like common sense, it's surprising how many go into the markets with excessive risk on an approach that they do not fully understand. Kevin provides a strategy called moving average cross with a twist. Moving average crossovers have long been a staple for trend-following traders, but Kevin adds a
You mean like a 10, 20, 50? You mean like a outlier trend template?
Twist to the filter. He says only act on the crossover signal if the current close hasn't moved significantly away from the previous bar's low. This filter helps eliminate false signals caused by short-term price spikes. For me personally, I'm not sure I like that logic, as I like to see conviction in the price movement. A surge in buying activity is a good sign for me. On that point, breakout trading is an area where Kevin offers valuable insights. In his breakout with a twist strategy, he incorporates the ADX indicator in a counterintuitive way. While most traders use high ADX values to confirm strong trades, Kevin suggests entering breakouts during low ADX periods. The idea is that breakouts from sideways markets, characterized by low ADX.
By the way, I've never used the ADX indicator, so I'm not going to be able to answer any questions on that because I can see the questions coming. But all indicators at the end of the day are just based on price and time. That's about it, and maybe volume, but that's it.
As it happened in DocuSign back in 2020, are more likely to result in sustained trends. Here, the stock hit a new 52-week high with an ADX value of 17. For those unfamiliar with the ADX or Average Direction Index, it is a technical indicator used to measure the strength of a trend in the market, whether that be upward or downward strength. ADX values below 20 indicate a weak or non-trending market, whilst ADX above 25 suggests a trending market, and ADX above 50 represents a strong trend. This approach is particularly useful for momentum traders. By focusing on stocks that have been consolidating, traders can identify opportunities where a breakout signals a fundamental shift in market dynamics, a theory that is closely aligned to our concept. In our breakout screener, we weight momentum based on factors such as breakout bar size, volume, the high and close of the breakout bar, if the price has moved beyond recent price points, is the MACD positive, is price above the 20-week moving average, are we at a new all-time high, is the overall market in good health and other financials also showing momentum. By weighting and scoring these accordingly, we can achieve a total momentum score which should, in effect, move probabilities into our favor. I must admit I have not looked at the ADX indicator in enough detail to offer a solid opinion. Having said that, it does sound logical enough to consider further analysis. Another standout strategy is the ATR-based breakout. Here, Kevin uses the average true range, or ATR, to
Hey, I use ATR.
gauge the magnitude of a breakout. A significant increase in ATR indicates that a stock has broken out with enough force to merit attention. For instance, during the pandemic, Zoom's weekly chart showed
So I've always considered ATR as a volatility measurement, and I picked that up from Larry Height, one of the market wizards I worked with, but also The Complete Turtle Trader, that amazing book right there. Interesting. I'd never used it in that way.
a doubling ATR after a period of consolidation. Combined with a breakout to new highs, this surge marked Zoom as a high potential trading candidate. The stock eventually tripled in value, showcasing the effectiveness of using ATR as part.
Well, and this actually does make sense because as ATR is getting bigger, that means the volatility is getting bigger. And if volatility is getting bigger, mathematically, the moves are getting bigger, right? That doesn't necessarily mean that the trend is stronger. It just means that the movement of those candles are larger.
Part of a breakout strategy. Again, although we don't use the ATR, we do use similar metrics to determine the strength of the breakouts. Quite often, visual qualification is enough. We find a lateral consolidation and a strong upward move in price supported by good volume. It is within these consolidation zones that we look for low-risk stop-loss opportunities. Kevin advises a systematic approach to testing. Start by selecting strategies that align with your trading style. Test each one thoroughly in a simulated environment, and pay close attention to how it affects your overall performance.
I would say also, as far as like simulated environment, I've had incredible success finding whatever indicator that I want to test, and then going back and looking at trades I placed, and then adding in that new indicator, and then seeing, okay, if I included this new indicator, does this change the outcome of my trade? How does it change the outcome of my trade? What could I do differently with this new indicator? And then just repeat, right? Because hopefully you keep good records. If you keep good records, this makes it really easy because you can tell when you get in, when you get out, and then you can layer in these additional indicators, maybe something you want to keep adding to your trades, and then just see how it helped or how it didn't help your additional trade or your existing trades you did take. It might be that you got in a little bit earlier. It might mean that you got a different exit signal. Whatever the case is, having those records makes it way easier because then you can see not just theoretical, but like if I had this indicator then, how would it have changed what I did? That's exactly how I trade with Outlier, right? All these buy and sell signals that we give every day, exactly this is what I did. Was I would take some of these and I'd be like, okay, the buy and sell signals, let's say, for example, I was in DEI, which is hilarious. Let's say I was in DEI, for example. I would take the outlier buy and sell signals and I would say, okay, well, on this date, this worked great for me. On this date, this didn't work for me. Okay, how can I adjust this, right? oh, I noticed when the heat map was getting stronger that my trades were getting better, something like that. It's just taking an analytical approach to the data that you have. And it doesn't necessarily have to be coding into a simulator if you want to think of it that way. Does the simulator help? For sure. But a simulator is not 100% necessary.
Performance. If a strategy improves your results, consider integrating it into your system. If not, move on to the next one. It's important to remember that testing is an iterative process. Even after incorporating a strategy into your system, you should continue to monitor its performance and make adjustments as needed. This ongoing refinement is key to staying ahead in the ever-changing world of trading. Kevin also places a strong emphasis on risk management. He advises traders to treat the testing phase with the same level of seriousness as live trading. Even when using small amounts of capital, it's crucial to maintain discipline and adhere to your risk management rules. Developing good habits during the testing phase lays the foundation for long-term success. Discipline is equally important when it comes to strategy selection. It's tempting to try every strategy in the book, but this approach can be counterproductive. Instead, focus on a few strategies that align with your goals and test them thoroughly before making any changes to your system. Some key takeaways from the book. Simplify your approach. Focus on strategies with clear logic and minimal conditions. Complexity often leads to confusion and poor performance. Test before you trade. Rigorous
Boy, I tell you what, that's right on. Test before you trade.
testing is essential before deploying any strategy with real money. Adapt to your needs. Tailor strategies to fit your trading style and system. Avoid adopting strategies blindly. Manage risk. Always prioritize risk management, even during the testing phase.
You guys hear me all the time talk about being a risk-first trader. It's true. If you know where your risk is, then you don't have to stress. Not at all.
Stay disciplined. Consistency in your approach is key to long-term success. Entry and Exit: Confessions of a Champion Trader is a valuable resource for traders at all levels. While the book could benefit from more in-depth explanations of some strategies, its practical approach and emphasis on testing make it a worthwhile read.
All right, cool. Now let's shift gears a little bit and let's listen to Kevin himself and an interview that I did with him way back when, August of 2021. And you're going to see baby boy Chris on here, by the way, when he was all the way back at 35 years old.
Where casinos lose money, but over years, as long as they don't give away too much free alcohol, they probably make money. At least they should.
So let's talk about your championship winning year. How did that go? How did we get there? Like, obviously we don't have time to go through the
And for those of you wondering, 10 Minute Stock Trader was my company that I sold to Outlier. That's how we got here.
whole year, but give me some of your highlights, some of the things you were thinking, maybe even some of your strategy if you're open to it. I really want to hear what was going on there.
Okay, so what I did first, I think one of the most important things to do is to know where you want to end up before you start something. So what I did was I researched past years of the contest. I think I even talked to the broker who was running it and said, oh, what were the top three winners, the last few years? What kind of returns did they have? And what I came up with was around 100% annual return was fairly likely to get me in the top three. So that became my goal. So now I had a goal to shoot for. So I'm aiming, I got to build a trading system that makes 100% a year, or at least, theoretically should.
So you're trying to double your account in the span of a year.
Right. And then I'd finish in the top three, which was the only goal I had. And on the flip side, I said, well, I can basically, I'm starting, I think at the time it was either 10, I think it was 15,000. I think now the contest is $10,000. That's the account size you had to start with. Or you could start with more, but that was the minimum. But I figured starting with the minimum was probably the easiest way to significantly make a lot more money. So I had in my mind that I want to get 100% return. And on the downside, I said, basically I can lose, I don't know, 8,000 or 9,000 of it. So basically it was, you're up there batting and you go for a home run or you're going to strike out. Okay. That was the way I started. So I developed a system, which means I came up with some rules, back tested it, and I applied it to actually, I think, a basket of like 8 different commodities or futures markets, including things like, I remember copper. I think I even had wheat in there and a couple other market, obviously 600 other markets. And it was a trend following approach. So it really wasn't anything super sophisticated. And really, since I was looking to trade possibly 8 different markets, with the margin requirements, I couldn't even be in all the trades. Luckily, they weren't all signaling at the same time. They'd spend quite a bit on the sidelines. just when they noticed a trend, then I'd hop on.
Mhm.
And that's the way I traded basically the whole year. Towards the end of the year, I think that my account was big enough that I actually doubled my size. But for the most part, things were already decided. I was already up over 100%. And it ended up working out that all 3 of those years, I finished in first or second place. So that was kind of how I ended up.
So were you looking at like moving average crossovers? Were you looking at specific indicators? Where were you looking at? And of course, if this is too close to the vest, I understand we don't have to go that deep. But
Oh,
you
no.
tell me, what were you looking at?
It was basically a breakout method. If today's high or today's close is the highest close of the past 50 days, 20 days, whatever it was. I don't
Sounds like a
remember.
turtle system.
Yeah. I mean, it was just that. And part of that was making sure I didn't get big losses. So, I'd have a stop loss in place. And
Wait, a champion trader talking about not taking big losses? Wait, buying things as they're breaking to new highs over the last 50 days? There is a indicator called Keltner bands. Let me add these to the chart real quick and you'll see what I'm talking about. Or Keltner channels, Keltner channel, there. And let's say we add it for the 50 days. Average, I think this is what I'm looking for. Right. No, that's not it. Dang it. What is it called? I thought that was it, but it's not it. It's let me look real quick. Bands. It's not Bollinger Bands. I know you're thinking that. Oh man, I can't think of it off the top of my head. It's what the Turtle traders used. And hang on. Turtle Trader Donshian channel. Thank you, Nico. That's exactly what I was thinking of. I left my mind for a moment. Donshian channels. Cool. And then we do 50 periods. Thank you very much, Nico. Gold star, my friend. So what he's saying is when it breaks to a higher point over the last 50 days, like right here on Palantir, that would have been an entry signal. I'm sure there was more to it than that, but a breakout over the last 50 days. That's the highest price of the last 50 days. This is the exact opposite of what most YouTube will tell you. And this is what a world champion, 3-time world champion trader would tell you. Buy high, sell higher. Buy high. When it breaks the highest point in the last 50 days, that was a signal to enter for him, right? It's not buy AMD as it's going down, right? It's continuously making new 50-day lows, if you want to think of it that way. When's the last time it made a 50-day high? Was back in October. And since that point, it's sold off like crazy. This is counterintuitive, right? And when we played the Minervini video, he talked about how contrarian trading is actually not buying something as it's going down. Contrarian trading is doing the opposite, which is buying when it's going to higher ground, buying when things are working. HIMS, another example, right? You're only going to make money when the price is going up. So why not wait until the price is going up? Like right here. That's the highest point in the last 50 days. And that was right before this big move. Doesn't guarantee it's going to be a big move, right? Like right here, it popped up and then it came right back down. And that's how trading goes. Sometimes you make a buck, sometimes you lose a buck. But if you're in when the trend is going and it tells you, the market tells you when the trends are going, then you can actually make money. Because you probably heard me say this before, and Kevin's pretty much trying to say it, but only price pays. Only price pays. And dude's buying it when price is the highest point that it was in the last 50 days. Exactly.
And that was big enough that it wasn't going to get knocked out easily. So it was just kind of like a longer term trend following. And I forget which year, it might have been 2005, or maybe it was 2006. Anyways, most of the profits came from copper. One of those years, copper just took off. And
I remember that. That was the year. So I live in Texas. They were stealing air conditioners for the copper out of them. Yeah. Okay. Sorry to interrupt you, but yeah, that makes me think of it.
I think it was 2006 actually, and that was the year I ended up winning. But when I went back and looked at it after, it was most of the profit came from that particular market with that system. And the interesting thing, it didn't dawn on me at the time, but now years later, it's become a fundamental part of what I do. I realize if you trade 8 systems, for example, not every system is going to make money every year. And maybe 3 or 4 of them will actually lose money. But what you're hoping for, and what usually happens, is 1 or 2 of the markets will do really well. with whatever systems you have. And
Okay, so to break down what Kevin's saying right there is you don't know when you're going to get paid in the market. And so when you're like, oh, I have to make 10% this month. Oh, I have to make 40% this year. Oh, I have to make sure at the end of the day I've got my trading nut. You may have heard that. You can't tell the market when you're going to get paid. No way. All you can do is wait. You are a sniper. You're sitting up in the deer blind and you're waiting. And you're waiting. And you're waiting. And days and weeks and months could go by. And you're waiting. And you're waiting. And then right there, that's the one you've been waiting for. Right. And you get a 38-point buck. I don't deer hunt, but I'm just trying to use that as an example. That's the mentality you need to have as a trader. I don't know when I'm going to get paid, but I'm sure as hell going to be there when the opportunity is there. And sometimes it doesn't work out. And sometimes I'm going to get paid huge. And sometimes I might make it take a small loss, right? There's only 3 possible outcomes: a big win, a small win, or really 4 possible outcomes: a big win, a small win, a break even, or a small loss. Big losses, that should never be a condition in any successful trading plan. Never, ever, ever for the rest of time should you ever have a big loss, because you should be trading risk first.
And a lot of times they'll make the bulk of your money that you make for the year. You might have to wait. I mean, I've had years literally where I've waited until November, December, and I've been losing money for the first 9-10 months of the year. And then all of a sudden it takes off. But if you trade it back.
Exactly. You can go 10 months of losing. And then all of a sudden, all of your profits get made back and more. And you can double your account in the span of a month and a half. It's actually how trading works. Sounds crazy, but that's why you cannot tell the market when you want to get paid. So I think day trading is a losing proposition, because if you're telling the market, I want to make sure I get paid every day or every week, bro, you're going to be taking risks that you don't need to take just because you want to have that more, you want to have more cash in your account, but you can't control when you're going to get paid. Not at all.
Basket of systems. And so this is different strategies. Some are mean reverting, some are trend following, long-term, short-term, different futures, or different stocks, if you trade stocks. And what you're hoping for is that some of them will do really well and others will just kind of hang around. The problem is you don't know this year what's going to work well. Just because it worked last year, it doesn't mean it's going to work again. So that's why you do that. And that diversification ends up really helping you out.
So how is it like going through the year? Were you up early, or did it take some time to kind of compound and grow?
If I recall, it was kind of going up slowly, and then about mid-year it kind of went up a bunch. I don't know if that was true for each of those years. And then I just kind of wrote it, and then it didn't really do much towards the last part of the year. And actually, it's kind of funny, because your perception of, or your memory of something sometimes isn't what you remember. So I thought in 2006, when I actually won the contest, I thought I was going full out trading the whole year. I didn't care about the competition or anything. When I went back and researched it for my book, I realized I took off like the last month of the year because I was out in front, and I decided, hey, I think I had around 150%. And I said, I don't want to lose now. I can win this thing. And I actually turned off my system, but that wasn't what I remembered until I went back and looked at it. So it's kind of funny sometimes when you go back and look at things, you're like, oh, that's not what I thought I did. But it ended up working out pretty well.
Yeah.
So we'll go ahead and cut it there. But I think Christopher had a question in the chat. Let me find it. I actually thought it was a really good question. So yeah, there it is. Do buy stops sound stupid? Kind of saying if it goes up to this range, I want it. Absolutely not at all. The best traders in the world think exactly like that. When it reaches this level, that proves that I want to get in, and I might have to get out right away. I might have a stop loss on this one pretty quick, but I'm only going to get in if it goes up to this level to start, because that shows the momentum is there. That shows that everybody who wants to buy it, all of these people right here, that shows all of these people, they want to get in, and they want to get in with you. So no, dude, that is actually a brilliant idea. And I used to do it like that. It's something that absolutely can work as long as you know where your risk is at. And that's where I always go to, right? We can't predict the future. We can't see the far right-hand side of the chart. But what we can do is trade risk first, know where we're going to get out, and take those opportunities where they come. Let me introduce myself real quick. My name is Christopher Ewell. I've twice been awarded Top 100 People in Finance. I was mentored by 5 of the market wizards, the best traders of all time. I've been successfully trading since 2009, and this is where outliers like us save time, make money, and start winning with less risk together as a team. So go ahead and subscribe if you haven't already, and let's rank this video. I know we kind of did like half and half. Oh, I closed the video. I know we kind of did half and half between my video and that video, but I still feel like knowing what's going on with the market, knowing what a champion trader would do is useful. So I'm going to give it a high score. I'll absolutely give it a high score. Once I find it in my history real quick. There we go. I would absolutely give that a high
Hi all.
score.
In today's video,
So where are you ranking it at? By the way, nobody's going to get a 7. I knew it. Everybody's throwing 7s around. Everybody's throwing 7s around. No 7s. Sarah throws an 8. David says 7. Oh no, David says 8. Lars, I don't care about principles. If my portfolio grows 100%, then there's a super chat coming. No super chats. No super chats. I don't want your money. Part 2 was a 10. Oh, thanks, Mikey Mike. I appreciate that very much. Nate says, I didn't learn anything, but Chris taught me all this already. Well, I'm glad to help out my friend. 8.5, 8, 8, 8, 6 from Tom or Tim. Gainer Spots is good video. 9, 6.999. 8, 8, 8, 9, 8. All right. I think the consensus here was definitely an 8. You guys voted for that, not me. So we'll take this and we'll put it over in the 8. I love this kind of stuff. I love hearing from people who actually made money in the market, rather than people who are on YouTube trying to tell you that they're the most brilliant things of all time and that you have to buy AMD because it has to go up from here, right? So in my opinion, and that is what made me successful, was seeking out people just like Kevin, these successful traders in the market. But real quick, I want to hear your thoughts. Let's go do a video ranking real quick. Let's go do a poll. That's what I meant to say. While that loads up, don't forget you can save 64% on the annual pass. That's just 82 cents a day over at outlier.com. And if you're on a monthly trial, just shoot us an email, support@outlier.com, and we can upgrade you. We'll take it from there. All right. So today's poll is: successful trading is about minimizing losses and maximizing gains. What do you think? True. Smart traders manage risk well. False. Trading takes more than that. Trading takes more than that. What? Minimizing losses and maximizing gains. I want to hear your thought. Go vote on my channel and we'll come look at that in just a minute. But in the meantime, put your stocks in the chat. Let's go. Let's do this. Put your stocks in the chat in the meantime. While that takes a moment to load, again, SCCO is the only trade that I have on right now. And I mean, it's following my trading plan. This morning, it looks like it might gap up, but that's okay. That's okay. I'm still going to follow my trading plan. I'm going to take this off though. Danchin channel. Still going to follow my trading plan. Win, lose, I'm indifferent. Just following the plan, right? Driving from Dallas to Disney World. That's all we got to do here. All right. Bricks Earth. First time I've seen you here. Glad you made it. Wants to look at Hershey, HSY. All right. Hershey's right up in this order block right here, which is definitely not bullish. Let's look at it on Outlier real quick. Dashboard, HSY. Chad says 9 and a corner. It's nice to hear a humble champ. Yeah, I really like that guy too. I think Mikey Mike was saying how much he liked Kevin Davey, right? You can tell someone's personality pretty quick. Yeah, you can tell if they're a pretty cool guy or if they're going to be a problem, right? You can tell if they're going to be I like this guy. That's where it was. That's what he was saying. You can tell if they're going to be somebody who you want to listen to or somebody who's just fishing for internet drama, like we looked at earlier this week, which was the absolute worst video I'd ever seen. All right, Hershey does have a buy signal, came through on February 12th. It was deep in that fear right there. And then it's starting to get less fearful, actually into the greed. And if you look at the staples sector itself, it's getting into the greed as well. Now, remember, 40% of the stock's move is due to the market. And with the market being weak and Hershey being strong here, that shows a lot of relative strength. So if the market was strong, this would be even higher. So 40% move is due to the stock market. 30% is due to the sector. As you can see here, the sector is also getting more greedy, less fearful. So that helps it. And the last 30% is the stock itself. So Hershey looks pretty sharp. I got to tell you that. Let's look at Cake. That's a Jeremy stock. And I remember covering this one like a month ago on Jeremy's channel. And I said specifically this, right? I said, Cake has a lot of relative strength. And that was, I guess it was the time it was January, it was going up. Had a ton of relative strength at that time. But keep in mind that trends change. Tell me order blocks don't work, by the way, right? It came up here, made an order block, tried it again, couldn't make it. This order block will disappear when the market opens here in a little bit. Yeah, but this is a bearish trend right now. If we look at Cake on here, we got a sell signal a little bit ago. Here we got the sell signal on February 12th. Greed had reached a value of 30 out of 50, but it's since then it's started to come out. Greed's starting to evaporate a little bit, and you can see the discretionary sector also. The greed is all gone, and it's now in the fearful sector. So I would definitely, I would be very cautious. See that it just disappeared right there. I don't know if you caught that. I don't know if you caught. You could rewind it and do it again because the market just opened a second ago. Okay, let's go to the next one. Golden oldie. Kevin Davey had the confidence to stop and not blow his account percent gains, and he got his holiday in. Very, very smart. Just making money wants to look at OKTA. I looked at this one yesterday. OKTA. Ooh, got a big order block right here. It's going to be some overhead resistance. Let's look at it in outlier. OKTA. By the way, Mahesh came on the live stream yesterday and talked about how order blocks, or I should say outlier blocks, are out of R&D, and we do have new charts coming soon. The whole new charting platform is going to look completely different, and I'm really excited about where that's going to go. So buy signal today. Keep in mind, though, this one was getting greedy. It started to get fearful. As of today, it's turned around. The tech sector, however, is still looking pretty fearful. So if it can cross through this order block, now could be an opportunity. Once it crosses and closes above an order block, keep that in mind. It's a double order block too, which makes it even harder to cross. Both of those happened last March. Double order block right here. If it can cross that, could be a great opportunity. Jennifer wants to look at Grr. I know this one isn't an outlier. We checked this yesterday. Grr continues to monkey hammer to the upside with the Gorilla Technologies Group, 10, 20, 50 pointing north. Just know where your risk is at and have that plan to get out. Let's see. A couple of y'all already want to look at OKTA. We did that. ELST, got a buy signal, but scared of the market breath. Okay. Or ESLT. And dude, that's, in my opinion, I think that's a great thing to do, right? Just be chill. I'm not going long anything right now. Not at all. And sometimes you're going to miss out on something like this, right? This is one we must have looked at a couple of days ago. Look for the gap and then give it 3 candles to see if it can gap and go. And this one could look great. Could look great. Are ATRs in Aller? No, and it's just a simple indicator on your chart. I actually built a spreadsheet. Man, I'm struggling here. I'm going to need more green tea. I built a spreadsheet. Call it the position sizing spreadsheet. You can get it inside the VIP Investors Toolkit in our Discord. And you can add in what stock you want to look at, add in your balances, things like that. I've just got a few of these, for example. Then it'll calculate your ATR for you. It's going to be a little bit different than what shows on the chart. There's a little bit of rounding here and there, but it's going to get you in the same ballpark. And it's also going to give you position sizing. So for example, SCCO that I just took on has a ATR that's about 10 times higher than IBN, which is the one I had before that. So my position size is significantly smaller in SCCO because the volatility measured by ATR is significantly bigger. That's one of the reasons, like, I'm not even stressed. If I lose, I lose. It's no big deal. That's just part of the game. So just know your risk on this. I mean, especially with Trump right now, nobody really knows what's going to happen. So let's see how you guys voted on that poll real quick. I'm very curious to see. Looks like we got successful trading is about minimizing losses and maximizing gains. What do you think? I'm going to have to pick one to see the results. So I'm going to pick with smart traders manage risk well. 89%. Very cool. Thank you guys so much for voting. I'd love to see that. And of course, tell me what you're trading in the chat and come back tomorrow where outliers like us We'll save time, make money, and start doing with less risk together as a team. Now be sure to click on one of the recommended videos that are popping up right now. I recommend that you click one. And I also recommend you come to this afternoon's live stream, and I'll see you there.